In this video, we're going to talk about important updates and those relating to dividends. So we're going to cover what are important updates in the first place, how do you actually receive one, why are they so important to us as investors, how we can actually use these particular dividend updates. Then I'll go over some examples of all the different topics covered with this particular type of update. And lastly, I'll cover where you can go to do some more due diligence. So for starters, what are these important updates? Well, it's pretty much in the name, but it's a brief summary of an important development in the underlying business or stock that it's referring to. So in this instance, we're going to look at dividends, but it could be other things like earnings reports, insider transactions, executives leaving the company, which we've got other videos for as well if you'd like to watch, but those are kind of the important developments it's referring to. So how do you actually receive one of these developments? Well, thankfully, it's very simple. All you have to do is add a stock to either your watch list or to your portfolio, and it's automatically eligible to receive these updates on. Now, they'll be displayed in either your dashboard or you'll receive an update in your inbox. So why are they so important to us as investors? Well, ultimately, it allows us to monitor the stocks that we're following, be it the stocks that are on our watch list that we're interested in buying, or the stocks that are already in our portfolio that we already own that we're interested in keeping an eye on. It allows us to remain informed on the fundamentals on those topics that I was discussing. So like the dividends are important, the executives leaving the company is important, earnings reports are obviously very important. Those are the kind of fundamentals we want to stay up to date on. And lastly, it allows us to save time during the monitoring and research phase of our investing. So if we didn't have these important updates delivered straight to us in our inbox or on our dashboard, we'd have to go and scour through the company's like quarterly filings or annual filings or just any SEC filings in general to look at like insider transactions or something. And that could be quite a time-consuming process. So having these delivered directly to us saves us a lot of time in that respect, where we can go and spend it doing other things like searching for new opportunities instead. So we're going to first cover the upcoming dividends update, and this dividend update provides a lot of details about any dividend that's about to be paid on that particular stock. So it goes over things like the dividend amount, like how much it is per share, when the dividend payment date is, like when the amount would hit your bank account, the ex-dividend date, which is the date that you have to own the stock by in order to be eligible for the dividend, and I'll go into that in just a second. The dividend coverage ratios, which is like how well the upcoming dividend is, or how well the dividend right now is covered by earnings or free cash flow. Dividend yield is like obviously how much a dividend per share divided by the share price. So if a company pays like a $1 dividend and is trading at $10 per share, that's a 10% trailing yield. And the comparison to the industry and market is just there to show us, okay, if this yield is 5.5%, how well does it compare to the industry and market that it's in? Like, is there better opportunities out there, or is this one of the standout opportunities? So I'll go through a few examples and show you what I mean. This first example is the example we just saw on that page. So there's a dividend coming up of about 19 cents or 19 euros per share. Eligible shareholders must have bought the stock before 24th of January 2022. The payment date is 26th of January, so it's just a couple of days after. The company is paying out more than 100% of its profits and is cash flow negative. Okay, that's quite concerning, and I'll show you how we can do some more research into that. The trailing yield is 5.5%, and compared to the top quartile of dividend payers, that's higher, right? Because they're paying 3.4%, and it's also higher than the average of its industry peers, who pay out about 4.1%. So this tells us like, okay, the yield's really good, but there could be some issues with the affordability of it. So let's go have a look. The first section I check out is in the dividend section, and this just gives me a timeline of the dates, right? So it tells me I have to buy within the next 6 days before January 24th to be eligible to receive that dividend in my account on the 26th of January. Now, the next section I'd have a look at is still within the dividend section of the company report, but I go and have a look at the payout ratio, because this was the thing that was most concerning, right? So it told me that it was paying out 172% of its earnings, which is quite unsustainable, right? Like you can't pay out more than you're earning. So I want to go and get some more context on that now. So then I would have a look at the company's future forecast, right? Here I can see what analysts expect to occur for the company's revenue, earnings, and free cash flow. We can see here that the company, like we saw in the update, is cash flow negative, and its earnings seem to have declined a bit over the past year. However, you can see that analysts actually expect the earnings and free cash flow to recover over the next couple of years. So that's a bit more reassuring, right? It's like, okay, the dividends aren't affordable right now, but situation seems to be expected to improve. Therefore, the dividend is expected to be affordable again in the next couple of years. Also, to have a look at this current payout ratio, I'm like, okay, the dividend is probably not going to be paid out of current earnings. Does the company actually have any cash on its balance sheet to be able to pay what it expects to pay in this upcoming dividend? And so I have a look at the financial health section of the company report, and I can see here it has 10 billion euros on its balance sheet. And so I'll go and have a look at how much the total dividend amount is expected to be. Like, it would obviously be dividend per share times by the amount of shares outstanding, and that would give me an idea of if they could actually afford it with their $10 billion euros worth in cash. If it's like $5 billion worth of dividends being paid out, they can afford it. So that's what I would look at in this respect. Now, while I'm in the dividend section of the company report, I'd also just have a look at the comparison to the industry and market. As we saw, this particular example is like a standout where it's like top quality, where it's better than the industry, better than the top quartile of market payers. So it really is one of the better opportunities out there. I'd also have a look at this stability and growth of payments chart in the dividend section. So I can see here that the dividend, this blue line here is the dividend yield, this teal blue line here is the annualized dividends per share, and the purple line here is the earnings per share. And it's on a different sort of chart, I suppose, to the dividend per share. So the takeaway here is that, like, okay, the company actually did cut its dividend back in like 2012 and 2013 quite significantly, and as we can see, it seems like the yield obviously fell heaps as well. So it fell from 11% to like, I suppose 4 or 5%. But what that tells me is that the share price actually increased heaps. And this particular time, the share price actually increased from about two or so euros to about 4 euros. So that explains why the yield went down, right? Because as the share price went up, but the dividend per share got cut, the yield was obviously get cut as well, right? Because you're paying a higher price for less of a dividend. But we can see since 2014, it seems like it's got its financial affairs in order. And then from then, it was able to sustainably increase its dividend over time. And like I mentioned, this is an annualized dividend figure. So annual is basically backwards looking, and it's historic payments, whereas annualized figures are like a good proxy for forward looking payments. So it's the latest dividend amount times by the frequency that payment occurs. So it's useful to help us predict like future dividends. And you can see here, analysts actually do provide future forecasts, as we saw for the future section, and they expect the dividend per share to actually keep increasing over time. So this is kind of supported by the fact we saw the future growth section and we're like, okay, yeah, earnings are expected to improve. That's probably where this is coming from as well. So maybe this short-term like high payout ratio of 172% is only temporary, and the situation is expected to get better. And this is just another layout of the stability and growth of payments we saw just on that page there, but without the earnings per share display. So analysts actually expect the company to be trailing on a yield of like 6.4% in a couple of years' time, or it is trading on that right now, and it expects it to pay 0.44 euros in the end of 2024. So interesting to see that they think the dividend will continue to improve. Now, this next example is very similar, but it seems to be a better payout ratio, right? So very similar, 14 cents per share, buy it before the 21st of January, pay date on the 1st of Feb. It's a comfortable payout ratio though, and it's well supported by cash flow, so that's a bit more reassuring. The trailing yield is 5.3%, and so that's better than the top quartile of dividend pays in the whole market that it's in, and it's higher than its industry peers of 3.2%, so that's good to see. Again, I would go to the dividend section, check out just the timeline. Okay, I got 2 days left to buy this share to be eligible for the next dividend, which is interesting. That tells me I haven't got long to decide. And then I'd have a look at the payout ratio, right? So 31% tells me that they're able to retain like 69% of their earnings. So that was of their previous payments. And so they've got a pretty conservative payout ratio, meaning if their earnings were to decline for whatever reason, the dividend doesn't seem to be at too much risk because their payout ratio isn't too high. If it was 90% and their dividends were to dip a bit, their earnings were to dip a bit, that could be concerning, right? Because the dividend might get cut. In this case, looks to be all good. I'd also have a look at the earnings and revenue history just to kind of get an idea, and it seems relatively like flat and steady. Sure, the revenue's been a bit unpredictable over the past couple of years, but earnings for the most part seem to have been somewhat predictable, and like they dipped a bit over 2020, but have been pretty consistent over the past year or two. And as for the stability and growth of payments, I can see that the yield has been decreasing somewhat over the last almost 10 years, but the dividends per share have been reliably and consistently increasing, so that's really good to see. And dividends are also obviously paid out of free cash flows. So this purple line here represents free cash flow, and we can see that since 2018 or so, it's been positive the whole time. So that's, I suppose, how they've been able to pay these dividends, because not only have they chosen a low conservative payout ratio, they've been generating free cash flows. So that's really good to see. Now, this is a company with no future forecast, meaning analysts haven't actually provided any estimates of the future. So you'll see this this chart right here, the stability and growth of payments, actually stops here at 2022 because there's no estimates of the future. So I'd have to make my own judgment call on like what I think the future will be like based on my own research, because there's no analyst covering the stock. Again, I just have a look at the dividend yield versus the market and industry. And again, similar story to the one before. It seems to be one of the top dividend payers in its market and industry. So that's good to see. That's like supports the thesis that this is like a good dividend stock. Now, that was the upcoming dividend update, but there's a few other dividend topics that are covered in these particular important updates. The first two here are the dividend decrease and increase. And you can see here, you can pause the video and read the descriptions if you want, but this one here is a dividend decrease, where the previous dividend was actually, 5.38 cents per share, but now it's paying out a distribution of 4.9 cents per share. This is a dividend increase, where its distribution is actually going to be 1.79, and that's its prior monthly distribution was 1.6 cents per share. So, pardon me, any of these sort of updates as well, you'll receive updates on these increases or decreases. The next type is either special dividends or dividend initiations. Now here we've got an initiation where it's basically this company here is paying its first ever quarterly dividend, and it just tells you updates about it there or details about it there. And the next one is a special dividend where the company is like, okay, we've got excess amount of cash flow for whatever reason, let's reward our shareholders and pay a one-off special dividend. In this particular case, it could be a business where it's like it had an amazing year and it's like, okay, well, we actually have plenty to reinvest already. We don't need all this cash. We don't have this cash. We don't need to reinvest this cash. Let's reward shareholders and pay it out. Or it could be like a cyclical sort of business where it's like in a period of doing really well and it's like, okay, well, we didn't have a previous sort of consistent dividend. Let's pay a special dividend now because we're in a really high cyclical time and we're performing really well, but people know it's a special dividend, so they know it's not going to be repeated. That's what these kind of special dividends indicate. So this is all the dividend updates you'll receive, and so this is basically where you can go to do some more due diligence. You saw we checked out the dividend section to talk about, or to look into the payout ratio and the stability and growth of payments, and we also had a look at the future growth section just to look at the company's like future forecasts and see if like this kind of dividend payment situation right now, if it is unsustainable, to see if it actually isn't as unsustainable as we think, like if the company is going to improve its earnings in the near term. And lastly, I'd also have a look at the financial health section. If there was any concerning signs with the payout ratio, I'd go and have a look at like, okay, does the company have enough cash on hand to meet its dividend expectations in the near term? So I hope this video has been helpful about where you can go to do some more due diligence on the dividend stock, on the dividend update. But I hope this has been helpful. Thank you so much for watching.